Ladies and gentlemen, boys and girls, thank you for tuning in live while we are beginning our morning stream. Thanks for tuning in to Mind Your Biz. Thanks for being subscribed. Thank you for sharing the link while we are live. Every bit of support matters. Your clicks count, and really, you're the reason I make this media. So thank you for being here with me while we take this crypto journey together. Thank you for trusting me to help round up some of the most important and relevant news, especially if you are previously a GPU crypto miner. We're going to talk about what might be profitable. We're going to talk about how my prediction that I gave on the miner roundtable with every other major GPU mining channel came true, and how I was the only person talking sense about how we could potentially be profitable. Yes, I'm keeping the receipts on all that. We do not have an updated spreadsheet or any additional data feeds that are exclusive to Mind Your Biz, but I'm going to show you all the tools you can use to improve the outcomes for your GPU mining farm and for your future proof of work or just PC enthusiast endeavors within crypto. Stay tuned. Share the link. Yet another reminder that my analytics tell me that the majority of viewers who tune into Mind Your Biz, as it is with many other YouTube channels, the majority of you are not live. You can fix that problem by clicking the subscribe button, then smashing the bell icon so that you're notified when new videos come out. Stream health is good. See that we have likes coming in. Do be sure to make your chats public. I've allowed you to turn off the I've turned off the slow mode. We have Kevin Hawthorne in the chat saying, good morning from Lakeland, Florida. As always, Kevin, it's great to see you in the chat. Thank you so much for being a beacon of hope to the Lakeland, Florida community. I am truly flattered that you're here with us right now. And we're going to call it good. It looks like we are live. Welcome back, Mind Your Biz community. My name is Seth, and you know what? I don't like the... My name is Seth, and I'm getting fired up about crypto and the news cycle. Let's get this thing started, shall we? I just have discovered that I like sleeveless shirts better. So there you have it. We're going to talk about the SEC and how it's really the SEC, not versus Ripple, not versus LBRY, not even versus some of the influencers that are out there, such as Trayvon James or such as Ian Bellina. But it's really the SEC versus all of us. We're going to talk about that Vassal fork. That's get forked, Vassal. Get it? Play on words. And we're going to talk about all the regulations that keep on coming down the pike. They keep on making crypto life actually quite difficult for most of us. So don't go anywhere. Smash that like button. I mean, really, where else are you going to hear about proof of work and proof of stake and how to participate meaningfully in both without crap talking one or the other, but then also learn about the latest news, reviews, tutorials, hands-on updates for hardware that is very exclusive. You just don't see it anywhere else. People are not doing what we're doing here on Mind Your Biz. So appreciate you being subscribed. And again, by the numbers, we need more of you. Thank you for your support and sharing while we're live. Let me jump straight out of the way and get straight into it. The Fear and Greed Index is currently a score of 23. That's down from yesterday's 21 and down from last week's 34 and last month's 27. It's been kind of a consistent streak downward. People are feeling kind of low about the markets right now, and there are reasons for that. You've heard me talk about how not only are these irrational markets, not only are these markets that are driven by people's sentiment. It's also markets where the tail wags the dog. Price actually tends to lead sentiment. And sentiment now, as measured on social media, seems to be a trailing indicator. Is that financial advice? I got to red screen you before we go on any further. So let me go ahead and do that. No, it's not legal, financial, investing, business, self-defense, parenting, or home decorating advice. In fact, I'm not even going to share, I'm going to be a total a-hole. I'm not even going to share with you any health tips on how to improve your physique. Even though, maybe I could. Once upon a time, when I had my personal training certification, I might have been that guy. But here on YouTube, we talk about all of this, plus proof of work, and we track portfolios over months and years, and we talk to the founders and the builders in the space, as we have for years, to hold them accountable for what they're really delivering in value, and whether or not they're standing up to bullies like they promised they would years ago. So stay tuned, be subscribed, and tell a friend. Let's jump back into the Fear and Greed Index. Score of 23, log that away. What does it mean, though? Well, it means people are feeling, they're being reactive to what's happening in the markets right now. Here's Crypto Bubble showing us that ethw is tanking. Wow, who could have seen that coming? And if you watch the special with Serpent X Tech and myself, where we talked about how the current market maker systems are broken. There is no Oracle data that's feeding any of the ticker symbols over there. I want you to know that was for education and entertainment purposes. Nobody, not Serpent or myself, nobody was telling you should go out and buy ethw or buy tokens on the ethw network. Not at all. We were just pointing out the fact that that entire system is borked, right? There's nothing to trade. There are no counterparties willing to take trades. Everyone is just dumping. That's all that's happening over there. Is it's just a massive dump fest, and ethw will pretty much disappear this time next year, unless it's one of these other pet projects that just holds on for dear life somehow and doesn't go away. We'll see. Kevin Hawthorne is in the chat saying we have 25 more days until our dry season starts. It has been tough for me to work. That's a bummer. I know that Lakeland, Florida, areas of Florida, they're very tropical, and so, like he's saying, the rainy season versus the dry season is a lot harder to deal with if you have to work outside, right? If you have to work outdoors. So my heart is with you, Kevin, and I hope that the Lakeland, Florida community gets to see your smiling face and gets to interact with you and see how much you help the community very soon. Guys, it does mean a lot to me that there are members of the community who reach out to others, right? It's like Mr. Rogers said, look for the helpers, right? The world kind of feels a little bit difficult sometimes. And when there are people who are out there trying to give help, we need to support them and we need to help too, right? So those are the people that are building the tomorrow that we really want. But let me jump back out of the way and show the current markets. We got Chili's that's up, right? Who would have thought? XRP that's up, Algorand that's up, and then ApeCoin that's up, as well as Stellar Lumens and Pancake Compound as well. Not a whole lot else, except for a tiny bit of upward action for Atom, right? The Cosmos ecosystem. And as you know, here on Mine Your Biz, we've been talking very seriously about how you should be looking at the Cosmos and IBC ecosystem. It is an ecosystem for builders, and they are announcing Cosmos 2.0 or Atom 2.0 very soon. So some of the tokenomic issues that we've talked about and the gas fee structures and issues there that we talked about here on the channel hopefully will be fixed by the Cosmos building ecosystem very, very soon. Maybe that's something that we see. Maybe it takes a little while to roll out. The Deadwood is in the chat saying, morning, everyone. Appreciate you being here, the Deadwood. Appreciate that very much. Thanks for saying hello and keeping the chat flowing. Guys, it looks grim, right? That's why people are feeling kind of negative about the current market. That's why the sentiment is continuing to kind of dip. I mean, sorry, it's up from yesterday, but it's down from last week. So I think we're still going to continue to see people's sentiment kind of dip because most people, whether they want to admit it or not, whoa, the Deadwood, you brought a bunch of viewers with you. I don't know what just happened there, but keep doing it, man. Really appreciate that. So people start to feel a certain way when they see that markets are dipping or prices are dipping, and it doesn't go the other way around. We talk about it being a greed and fear-based market, right? A sentiment-based market, and that's kind of true, but we have to also respect the fact that most of retail they make dumb choices when it comes to investing, and they get themselves wrecked. It's unfortunate. But yeah, jump back out of the way. What could this mean? Well, let's take a look at our Bitcoin chart. The trusty chopsticks strike again. We are seeing a correction kind of along the trend line that we have defined here. Now, it's not within the channel that we have there. Let's zoom in a little bit more. See, we've broken out to the upside, and we're back flipping into a bearish divergence. See, we've had that crossover point on the MACD, the moving average convergence divergence, and the Deadwood says that that increase in viewers is his magnetic personality. I don't doubt it, the Deadwood. I'm just saying, man. Wood is a ferrous metal. It's totally magnetized. It's science. You can't disprove that. So jumping back out to the charts, the channel isn't really giving us the full story here. And there's a lot, of course, a lot of other factors that go into this. But I do think the chopsticks and the basic trend line is going to lead us to a little bit of market truth here. I think we can kind of follow this a little bit. Maybe we do see this value buy range in the coming weeks. I think it's not too far into the future that we see Bitcoin lose its support at this at its current rate, right, 19,000, and we do start to see a little bit of those sales. Now, that said, this entire green range that I've had sort of defined here for a while, I've felt like in my heart of hearts, none of this time would have been a bad time to dollar cost average into Bitcoin. Now, yes, you would have felt some pain right now with those big drops down, those big corrections down, and you'd feel even more pain going towards $10,000, like in that direction. But when Bitcoin does return to its new all-time highs, going past that $69,000 mark that it was kind of stopped at, its last resistance point, major resistance point, the last time it spiked, you'll feel good about these acquisition prices. You'll feel good about buying Bitcoin at $30,000 when it goes back over $69,000, right? You'll see that 2x. But buying it at 10,000 or closer to 10,000, you'll feel a little better, right? So dollar cost averaging, figuring out what your dollar cost average has been for all of that DCA into this, and buying in a dollar cost average while it's trending down is a tried and true method by people who aren't trying to be traders, but just investors, right? So this is not me saying that you have to do that. I am not your financial planner, and if you need professional help, go get professional help, right? A certified financial planner, somebody who understands a little bit about cryptocurrency and how to hold it in instruments like, say, like a Roth IRA or some kind of some other long-term savings vehicle, right? A long-term investment vehicle. Work with them and figure out what the best option is for you. I'm just saying, in generalities here, a dollar cost average into a channel like this is not the worst thing, because we may see, I think eventually we will see Bitcoin return back above that green line. And we'll see prices that go back up to this all-time high and beyond, right? We will eventually see $100,000 Bitcoin and possibly much higher than that. I'll make no other predictions other than that, just to say we will eventually see those prices. So if you're in this for the long game, you're not worried about it, you haven't quit your day job, you're kind of thinking about like a conservative approach, that might be the conservative approach that works best for you. So take that with a grain of salt, figure out whether or not that's the right approach for you, and then please don't blame me if you're like, hey, it didn't flip back into the price that I wanted exactly at the time you said. Well, to hold your horses, right? Hold your horses. That is a long game that I'm talking about there. So don't get upset at me when it doesn't immediately flip into profitability, right, in 3 months' time, right, towards the end of the year or into February of next year, right? 2023 is going to be a very interesting, bumpy ride, and in part because of a lot of the legislation that we are going to talk about in today's news cycle. First, let's talk about profitability, though, okay? So profitability to mine one full Bitcoin on something like an S19J Pro. You can get these at fire sale pricing, and I feel like I should probably talk about that on ASIC Miner Value. Let's go ahead and check out those prices right now. Those should be coming down, so let me move that over into our lineup. I apologize, there's no dark mode here, and I haven't applied an in-browser dark mode for that. We've got a couple other miners that look really sexy right now, right? Like Dogecoin and Litecoin being merge mined is the business right now. Cadena also doing phenomenally well. These newer miners, though, right, are definitely going to be a lot more pricey. So let's go ahead and just find the any of our SHA 256 models. And SHA 256, we're barely in profit, right? Barely 140 terahash at 3010 watts, right? Relatively low noise profile. Let's put that in instead, okay? So for our cost, let's put in 3010 and let's put in 140. So we'll go top of the line. We won't skimp here. And at this point, 8 cent power starting to make a lot of sense again, but you have to be in the top of the line. You cannot mess around with anything lower than the S19 XP. I've been talking about the S19J Pro, but like down here, right? The S19J Pro, whoa, yeah, this is the latest revision at 198 terahash per second, but it's still not profitable, right? You need that efficiency of the S19 XP. And the S19 XP right now, you're looking at picking it up for somewhere around, oh my gosh, it's still so expensive. Somewhere around $7,000 on the cheapest end. BT miners, apparently there are a couple of channels that have sponsorships by them. I do not have any affiliation or sponsorship. So if you do want to go check them out, then go check them out using like Serpent, my buddy Serpent X Tech. Use his link if you want to check that out over at BT miners. But yeah, about $7,000 there. Not the best, not the worst price. No PSU included. You're gonna have to spend another $50 to $100 on that. So just factor that in. And it just looks like it's gonna be, if you were getting into it right now, it's a rough time to get into it. But you are looking at 8-cent power at about over $4 in profit per day, right? Or rather, after power, about a little over $2 per day, and your cost to acquire one full Bitcoin, a little over $10,000. I think you'll be very happy with that, and that's with a pool fee of 1%. So just be aware of that. So yeah, just pay attention to that. The Deadwood drops some serious alpha there, and he's totally right. In the chat says, yeah, once folks lose hope, then the run will start. You are correct. We haven't hit complete despair yet. And I know that sounds like a terrible thing to say, but we need to hit full despair in these markets before we see the prices properly return. It's already happening in GPUs, but for ASICs, we need to see proper despair, right? Before things start to correct. Shout out to Serpent X Tech, who is sponsored by BT Miners. Go subscribe to his channel to see more info on ASIC mining. What happens when a GPU miner turns to ASICs? We're going to find out over on his channel. Here on Mineyourbiz, I don't know that I have the bandwidth, like literal, like attention bandwidth to be able to switch focus over to ASIC mining right now. We're going to be focused on node infrastructure and on your own self-hosting of node infrastructure and allowing for multi-purpose at-home node infrastructure. I think this is going to be important for numerous reasons, not the least of which things like the Vassal hard fork. Get it? Stereo 2 just jumps in, says good morning, everybody. But right here, get forked Vassal. It's a hard fork. It's a play on words. Okay, I've done a lot of gimmicks today, guys. I tore off my sleeves. I made this funny joke. What more do you want? Are you not entertained? Yeah, because these are the jokes, guys. These are the dad jokes. You signed up for this. But yeah, Bitcoin is going to, I think, continue to show us reasons to have despair. And yeah, the ASIC miner value, we just took a look at the S19 XP. The top of the line right now in profitability in ASICs is the Antminer KA3 at 166 terahash on the Cadena's algorithm, right? So it's kind of difficult. You need to really be a fan of Cadena, but you are going to see that you're going to be made whole on that investment very, very soon. Unfortunately, that's a $30,000 investment up front, and at BT Miners, you're almost at $40,000. Dudes, you're not even talking about used car territory here. That's a brand new car, driving it off the lot. And they say you're going to be made whole in about a little over 400 to 500 days, maybe 600 days if you overbuy, depending on one of these places. But that is a whole lot to lay out, right? I mean, shoot, if you went bargain hunting, you could find a used Lamborghini that had some mechanical problems for almost that price. I know, that's a stretch. But the point is, it's possible. People have done it, right? So you can get a sports car at about that price if you're willing to put in the work and DIY, right? So this is a lot, guys. People who are in profitability, like, oh, it looks so great. How much am I making per day? $70. How much are you paying? You're paying somebody's full-time annual wage in order to get that $70 a day. Don't fall for it. This is not the right time to buy hardware yet. We need to see full despair in those markets. But that's the cost of my one full Bitcoin. I think you'll be happy if you already have an S19 XP, or you can source an X19 XP, or you can help somebody to host an X19 XP on cheap or free or renewable power. You'll be very happy at $449 per day and acquiring one full Bitcoin at over $10,000. So consider it. GPU mineable coins. At 14 cents per kilowatt hour, nothing is in profit over 24 hours. And we've been talking about this, warning about this for days. 14 cents per kilowatt hour is the average across the entire United States. Places like Las Vegas, places like Los Angeles, places like New York, places like Miami. If you're paying the regular municipal rate for city power out to your home, you're averaging about 14 cents per kilowatt hour. I don't care what to mine says. 10 cents is not realistic. Way too many places are actually going to deliver power to you all in at the end of the month, averaging about 14 cents per kilowatt hour between your home and your mining activities. So those are just the numbers, guys. Don't shoot the messenger. I'm just telling you. That's how it is. So at that rate across the country, you're not profitable. In places like Germany, where you're paying over 20 cents, right? 20 cents USD per kilowatt hour, you're done. Places like LA, where you've been paying over 20 cents per kilowatt hour, you're done. It just can't be profitable there. Let's use the ASIC rate that we've used for so many months now, 8 cents per kilowatt hour. You are barely in profit, and that's on these random coins like Grin, illiquid coins, I should add, illiquid coins like Grin and like Ryo. You can't sell Ryo. You can't sell Grin. It's very difficult to find proper, like find somebody on the buying side of that sell order that you're going to do, even for that 15 cents. And you'd have to have a bunch of these in production, a bunch of 6800 XTs. You'd have to have maybe 100 or so, a couple hundred to start making it make sense. And then you wouldn't find the buyers, right? You wouldn't find the market depth to be able to sell these coins if you needed to fund your operations. Caspa, hey, it's there on the list. Hooray! There's something that didn't disappear from profit, but you go a little bit farther down the list, and even at 8 cent power, your RTX 3080 LHR is not in profit on Caspa. It's just on the top 3 list, barely underwater. There are a couple of projects or a couple of coins that are rather a couple of card profiles that are profitable on Caspa. Among them, the RTX 3070, the 3070 LHR, and then maybe a couple others as well. We got 3090 Ti. Yeah, go spend $1,000 on a 3090 Ti to earn 3 cents per day. No thanks. I will pass. What I will do potentially is get myself a 3090 Ti. Once we see full despair in those markets and NVIDIA releases the 4000 series, I might get myself a 3090 Ti for my workstation. Thank you very much. Because then I enjoy all the benefits, and I'm able to write it off for the correct purpose, right? And then maybe I mine with it later on. But I'm not gonna alpha buy. I'm not gonna do it thinking that I'm earning anything from mining. Certainly. Bottom of the list, it just gets so bleak, right, guys? The R9, the older generation of the cards, they're totally underwater. Even on some of the crypto note coins that they were previously so dominant on, Sumo Coin, Haven, and anything that's related to Monero and the early crypto night algorithm. It's just kind of unfortunate to see that it's just falling off, right? XDAG with RandomX, I don't know why you would want to mine on the GPU with RandomX. It's not great. And then VertHash showing up on the list, but not profitable anywhere. You would have to fully get across the tracks or fully go into a self-hosted or fully renewable situation where you're getting 3 cent power or something like ridiculous, right? Unicorn level power prices to start seeing anything that's profitable at all that makes any sense. And even then, you're looking at like 3090s, 3090 Ti's. You're looking at a bunch of other cards that I don't know, like why you would acquire these. It's $1,000 plus cards right now. So gear acquisition syndrome. I don't think anybody in the mining community is falling prey to that. Hive OS statistics, right? The Hive on statistics is showing that Ethereum or Ethash has finally dropped off. It took a while, like days, if you remember, for miners to finally get the memo that they needed to stop deadheading and like just letting their rigs run. And they needed to correct that and get to other algorithms. Let me clear my throat, guys. Just did a little workout before I started the live stream. And if you're wondering what Seth is drinking, this is a little bit of peach preserve. A little bit of peach preserve juice with, natural cane sugar, a little bit of stevia to sweeten it up a little bit because, it's a little rough to just drink when you thin it out, but it's thinned out with some purified water, and then it's branched chain amino acids. So this is my version of a protein shake, but it's a lot more tasty because it's, it's peach. But it still tastes like branched chain amino acids. So, whatever. That life ain't for everyone, but I like it. I've liked it for a quarter of a century. I'm going to say quarter of a decade. That's not right. quite a while. Then it says 90 for life. Folks will relearn wood gasification if fuel and electric costs keep going north as supplies become like honest politicians, non-existent. dude, you're not wrong. Wood gasification, methane recapture, stranded carbon, stranded energy capture. We're going to be getting very resourceful in the next year or two. Far more so than we were between 2008 and 2010 when markets started to recover a little bit. If you recall, it was a rough time for a lot of people. I think a lot of us have kind of committed to ourselves that we're never again going to let things get that rough. And if we have to take things into our own hand, take matters into our own hands to be resourceful, we will, right? So appreciate that you bring that up, right? 90 for life. I don't. I don't have the context there. Sorry, I'm a really straightforward kind of guy. I might have autism. It's possible, but I don't get the context there just yet. So Ethereum Classic is top of the list right now. 30% of the net hash on their system is going there, but 20% other, I don't buy it. That's gone up. It was previously 10% other, and we couldn't really attribute what that was going to. It may well be to ETH hash, but on other networks. Raven, Caspa, Ergo, Ethereum is still there, right? ethw is still there, 10% total all in. Flux, Raptorium, you'll love to see it. Raptorium is actually on their list. But it's been one of our most highly profitable CPU mineable coins for quite some time on our portfolio. And we did do not one, but 2 interviews with the lead developer of Raptorium, Big Piggy. And we have a commitment from him to come back on. I can't wait to chat with Big Piggy. Just such a great guy in the crypto space. So we're bringing back those developer interviews. Don't miss those, and do share the channel so more people see them. Current card profiles, we still see a lot of highly efficient cards. Looks like the 3090, RTX 3090 has risen in the rankings. Usually it's something ending in a 60 though, and you've heard me say that for years on the NVIDIA side. Something ending at a 60 is normally going to lead the pack. The 1660, the 2060, and 3060 are right there in the top 5, right? So are you shocked? Because I am not. Why? Because I've been saying it for years that these are the cards that miners gravitate towards and wind up holding on to for a long, long time. That's on Team Green. Team Red, it's still the Polaris cards. Who could have told you that? This guy did years ago, and I haven't stopped saying that's my story, and I'm sticking to it. Nothing else has really come up in terms of mining efficiency to be all that much better an option for large-scale deployment. On the ASIC side, definitely still have the L3 Plus using the Hivon firmware, and then the Antminer S9 using the Hivon firmware. So there you have it. Newer isn't always better, and I think that the numbers will speak to that very clearly. Mining pool stats.stream, we got to go over some of the stuff that's happening here. Where did Ethereum go? Right? You remember that movie Envy with Jack Black? Where did the poo go? Right? It's kind of funny. Clearly, it's gone. Right? So the hash rate is right-sizing itself. A lot of that hash rate disappeared. We see a lot that's gone into Ethereum Classic. 200% increase over the last 7 days. So pretty big. And then Litecoin dropping in its hash rate, clearly. Monero staying the same. Bitcoin Cash staying the same. Ravencoin popping up, but not as much as people think. A lot of people are, I think, overselling how much Ravencoin is benefiting from the Ethereum proof of stake change, the beacon chain merge. I don't see it. First off, I don't see the use case for Ravencoin. With all what I think is all of the due respect, I still don't see the use case for Ravencoin. I don't see it growing to be any more a robust ecosystem than Bitcoin is right now. It's based on a Bitcoin UTXO system with OP return, custom OP return fields inside of the wallet client. Well, Bitcoin can do that, and so can Litecoin. Anything that Ravencoin can do can be built on Litecoin, and for that matter, it can be built on Dogecoin. So you have these massive, massive market caps that could dethrone Ravencoin if there were a proof of work change that made it possible for GPUs to mine them. So I don't know, maybe we petition the Litecoin Foundation and the Dogecoin Foundation and developers to go for a GPU mineable algorithm, and like a hard fork from Scrypt. Maybe we collectively fork Dogecoin into GPU Doge. I would have no problem working on a movement to do exactly that, or to find a way to make GPUs the dominant force for mining on Dogecoin, because they're not going to fork from proof of work, I don't think. The Deadwood comes back in and says 90 for life is an organic vitamin mix. Tangy tangerine powder mix that did great for me. Also helped Bro during his cancer battle. Hey, well, I appreciate the recommendation there. I roll my own supplements, guys, and I don't. That sounds weird. Let me be more clear. I have my own ergogenic supplements. I buy in bulk. I use previously used bulk nutrition, use various now brand nutrition. I'll get just like creatine monohydrate. I'll get dicitrulline malate or citrulline dimalate. No, dicitrulline malate. Get a bunch of other supplements that I think are important. Creatine precursors, beta alanine is a really big one for me. I mean, I found that over age 30, that was a huge for me. Helped boost energy levels during my workouts and stuff. And then I'll kind of like mix it all together in a tiny little amount of water and just choke it down because I'm like, all right, got to get it past the gag reflex just to get that stuff in. I'm not a fan of artificial sweeteners. I'm not a fan of artificial colors. I'm not a fan of like having a little black box of nutrition. Like the C4 it's cool and all, or G Fuel or whatever this crap is. They try to sell you it. Like if they can sell it to you at Costco, I don't know that I really want that. I'll put it that way. Right, like if it's for plebs that are shopping for sort of a blue line sports supplement at Costco, I don't think I want it. Put it that way. So this is kind of in that fashion. I don't know. Did the same with nootropics. I do have an encapsulation machine for nootropics, and that's important to me because of my family situation. The Deadwood says perhaps a Seth mix. I probably should do something like that, right? Like mineyourbiz is not that bad a name for sports supplement, is it? Or a nootropic supplement, but I mean, we could go there someday, maybe. I came this close to launching the mineyourbiz brand of CBD oil, if you recall, and then just decided not to go that route. Too big a brand change. Let's keep it crypto, shall we? I already struggle enough with attention. So, yeah. Right. So, chia is coming down. 22 exabytes is where it kind of like settled overall. And then a bunch of other, like, it's just funny. We've got a bunch of other coins that have come up in hash rate. There you go. Flux and Ergo have been the recipients of far more hash rate than Ravencoin has this last week. Bitcoin Gold has come up too in its hash rate. So it's funny that it's not making some of those profitability lists the way I think maybe it should. Just an interesting landscape overall. Ethereum Classic receiving some, and then Dogecoin falling off. Bitcoin staying steady, right? Over the last 7 days, basically 0% change. But don't worry too much about that. Let's talk about the news, guys. The news is where it's at. There's so much happening. And what I want to start with is something along the lines of infrastructure, and we'll talk a little bit about regulations. We'll talk a little bit about the SEC. And there are things that I think are genuinely cause for concern with the SEC and the way that it's been approaching influencers, the way it's been approaching projects, the way it's been basically rattling its saber. But along the way, you might not like XRP, for example, but some of the terms that the SEC is putting into that filing would become legal precedent and give the SEC free rein to go and try to wreck a project that you do like, something like Flux or something like Ravencoin or something like Ergo down the line, because of the way they're framing some of these arguments. And the one that is going against an influencer right now is the one that I'm most concerned about. We'll talk about that in a minute. But Visa and Consensus back fraud detection platform Sardine, and they've raised $52 million because of that. I'm a little bit concerned when it's Visa and Consensus that are backing a system. I hope Sardine winds up being good, right? So we'll see. That's their Series B round where they've gotten $52 million. Raise comes 7 months after a $19.5 million Series A round that A16Z was involved in. These are people like, I get it. The reality of tech startups is that you do need VC funding. You do need angel investor funding. So, like, we can't make everything bootstrapped all the time, even though we might want to in cryptocurrency. When it comes to, like, fraud detection, for example, you don't want to have a token that stands in the place of, say, like a stock, right? Because the stocks or issuing stock for your company is a registered security. It's really that simple. So, like, too many people are trying to put the cart before the horse, trying to turn crypto into tech startups when you could just say, no, this is a tech startup. Let's do things the tech startup way. And that's been my stance in crypto for years now, too. I like interviewing the teams. I like talking to people about how they were funded, why they chose the funding path that they did. And I think that this is no exception. I think this will be very interesting. I do get a little bit worried when it is Consensus, and I do get a little bit worried when it's Visa or MasterCard, because it tells me that the data aggregation that's going to happen by this company may be useful to them. And that's always a question of, like, well, why do they find it useful? Are they just trying to bet on the right horse for fraud detection and maybe make some kind of a multiple on their investment? Or do they have more nefarious plans by way of data aggregation and then using that data against us in the future? Because most tech companies are a bit that way. Sardine, don't know them, couldn't, who could call these guys sinister, right? They look so well-meaning. And I think that they're very genuinely pleased that they've finally gotten the funding they've been working so hard to get. So I don't mean to say anything untoward about this group here, just to say I am worried about this group here that's backing these guys. So we'll potentially have these guys on at some point in the future. Maybe we'll take a look at what they finally offer to the community. But yeah, we'll see. I love their quote, though. Every company will be a fintech company if fraud doesn't kill them first. But we want to be there to actually prevent that from happening. It's kind of cool, right? We'll see how things go for them. But this is one of those things we need to pay attention to. Just like politics, you might not have an interest in it, but it has an interest in you, right? Fraud detection will eventually scrape your wallet data or the TXs coming out of your favorite wallets. So you got to be aware of these platforms. Speaking of which, the NASDAQ is expanding into institutional crypto custody. Why do they want to help to hold your crypto? Well, that should be pretty straightforward. They, again, are a big player, right? So a new division devoted to digital assets will initially offer custody services for Bitcoin and Ethereum. Now, part of this has to do with a push into the traditional investment vehicles, things like Roth IRAs or trusts, various ways of holding wealth so that you know that you have tax advantages. You're not dodging taxes. You are legally giving yourself a tax advantage. So the NASDAQ is obviously wanting to get involved. This is bullish, I think. I don't think it's a bad thing at all. We got some other news here, though. We'll do a little bit more on Ethereum out of Trustnodes. Now, Trustnodes has a piece talking about how Ethereum fell. Clearly op-ed that they're requiring a subscription to read. Same with how miners' Ethereum balance is unchanged. Now, I'm not going to go past a paywall, and I'm not going to give them my information. I'm also not going to broadcast any other article, right? So I do think it's interesting, though, that miners' Ethereum balance is pretty much unchanged. I don't know why it wouldn't be, though. In today's world, you have a yield-bearing asset by holding onto Ethereum. And there's also the reality that many miners, when they thought they were getting into proof-of-stake nodes and proof-of-stake with their Ethereum holdings, discovered that they couldn't unstake their holdings anyway. So yeah, you're going to see a lot of the Ethereum market become illiquid, quite a lot, because people have been storing up their 32 ETH, or they've been pooling their Ethereum to be able to stake it, and they're not getting liquid staked derivatives. They're not getting ST ETH or CB ETH from Coinbase. They're just staking, and they're discovering that their balance is unchanged because they can't sell it. Kind of a weird situation to be in, but there you have it. Thanks, Trustnodes, for literally nothing. All of your stuff is behind either a subwall or a paywall. So Be in Crypto talks about how almost 94% of the total supply of Binance BUSD is held in just 4 wallets. It's relatively centralized, but here's what I'm getting at. Here's why I brought this up. They've got some brief talking points there, but I want you to pay attention to narratives, right? We talked about the White House fact sheet, their press release that was a follow-up to or the Biden administration's executive order from 6 months ago. And I'm urging the Mind Your Biz community to turn a critical eye at some of these writings, at some of these press releases, and at all of the narratives that are coming out now. BUSD, I think, is going to continuously sort of be demonized for a while. So will Tether. The FUD will continue, but now BUSD is going to get thrown into the mix. Why? Because they are competitors to USDC. Circle is going to become the most favorable, in the public narrative, right, the mainstream narrative. Circle is going to be framed, USDC is going to be framed as the preferable stablecoin, the safe stablecoin. Tether and BUSD will be talked down. Why? Because Circle is going to be subject to the rules and regulations of the United States, and BUSD is going to be Binance's coin. Tether is going to be the original, right? The original FUD machine coin. Feels good, man. .exe. All right, so need just a quick break there, quick sip. But yeah, that is my suspicion, is that we're going to continue to see FUD against Tether, but now we're going to see BUSD lumped in with kind of like Tether style FUD. While back, Binance made an announcement about releasing an auto-convert feature for USDC and other stablecoins with BUSD. The auto-convert feature is set to drastically increase BUSD's market dominance. But I'm here to tell you, and I did say on the Mine Your Biz live stream, BUSD is already dominant over USDC, not in market cap, but in actual usage. People use BUSD. People don't use USDC as much. We'll prove that when we go over our portfolios in just a minute here. We'll briefly touch on that again. It's important just to be aware of, to see the crypto market as it is, not as we wish it were. But yeah, they say data presents a high centralization levels for BUSD at around 94% of all the BUSD supply being controlled by 4 addresses. That may be true, but we need to consider also that a significant percentage of USDC is always controlled by Circle. And that is 100% that's controlled by Circle. It doesn't matter how many wallets hold it. What matters is that Circle can shut down any wallet that holds USDC. And they have, and they will again. And for example, they have at the contract level prevented USDC from being used in Tornado Cash, the Tornado Cash smart contracts. And while Coinbase is publicly they're publicly suing the U.S. Treasury, right, and OFAC for its sanction of the Tornado Cash smart contracts. In the meantime, they're playing ball, right? They're doing exactly what the regulators want, and they're shutting it down at the contract level. So BUSD largely being held by 4 addresses, probably mostly exchange addresses. That doesn't bother me. That doesn't faze me. It's a stable coin that's designed for use in trade. It's useful for trade, and that's why it's used. And that's why BUSD has so much more volume than USDC. Some people hold their profits in private wallets with USDC and don't use it as much. So I don't view it as a bad thing that there's relative centralization of stablecoin supply. What does bother me is administrative control of stablecoin issuers, right? That's more dangerous than centralized ownership of stablecoins, frankly, is the ability to remotely shut it down. It puts it on par with a CBDC, and it makes it as dangerous to hold for anybody who is holding it as anything else, right? So, yeah, we don't value the same things there. Sorry, B in crypto, and sorry, author. I just don't think it's a problem. I don't think it's the same problem that you think. And it's a stablecoin. Like, stablecoins were not ever designed to be decentralized. So, yeah, I don't know what to tell you. Like, we need properly over collateralized algorithmic stablecoins that have permissionless creation, like DAI and like Frax stablecoin. That's the solution to that problem, not comparing it to USDC, because we need stablecoins that can't be shut down. We don't necessarily need to have all of that in more people's hands. We just need a greater supply of those, so there's liquidity in that market. Anyway, rant over, sort of, because attached to that news, Robinhood just listed USDC. Could this have potentially been seeded by Robinhood? Could this have just been a press release by Robinhood? Probably. Well, Robinhood tweeted out, USDC is now on Robinhood, Circle Pay, stablecoin, crypto listing, and then their little short code link there for Robinhood. That's a dumb short code. That's still 5-7 characters before you get to your link. But whatever, it's fine. It's totally fine. Trading cryptocurrency involves significant risks. Well, USD coin, or USDC, is supposed to decrease those risks. Let's see what they're... Oh, it's just a GIF. All right, cool. That's great. Okay, so we got stable coins. That's great. They also finally listed Cardano on September 1st, Shiba Inu earlier this year, which is hilarious, right? They were trying to get liquidity, but now they do realize they need that counterparty coin. They need that stable coin in order to decrease the counterparty risk of people using their US dollars and keeping like and kind together. The stable coins originally hit the scene for us to decrease our tax burden. That was supposed to be the case. Decrease the tax burden of trading out of, air quotes, crypto into USD, right? Your actual fiat holdings on an exchange. We'll see if the regulators continue to view it that way. But yeah, USDC being listed by Robinhood and BUSD having a bit of a FUD takedown on a different news journal, I don't view as coincidence. That's why I'm bringing it up. Mind your biz fam. Stay awake. Don't worry about being woke, but stay awake because this stuff is happening whether we like it or not. MicroStrategy back in the news because it's buying 301 Bitcoin for $6 million. Who does that? Well, apparently, if you get free loans, right? If you get basically interest-free loans, why wouldn't you, right? Why wouldn't you dollar cost average all the way down to 10K? I would. I mean, why not? If there's enough liquidity in the Bitcoin markets, if you could borrow millions upon millions of dollars or billions of dollars, I would look for some kind of an asset that would allow me the flexibility to buy all the way down without impacting price negatively. And then I would just sit back and, win 2 years later, 3 years later, 5 years later, 10 years later. Let the balance sheet just grow like crazy. It's not a bad strategy. So, yeah. There you go. Congrats, guys. You did it. Did you do it with free money? Probably. Can we do it too? Probably not. We don't get free money. We don't get interest-free loans the same way. So good job. You did something that was a unique competitive advantage. The Deadwood asks, they must FUD till politicians get their money and friends in first. Will we see one last run before they turn it into a New York Stock Exchange? Yeah, maybe. Yeah, that's you make a good point, and we've been saying that as well. Like the institutional interference, the manipulation of the crypto markets, this last bull run has been unique, and it has been largely because of that. We know that there is insider trading happening on Capitol Hill. We know that U.S. politicians, at least, if not other international politicians, that they're involved in insider trading in every other market, right? They manipulate markets so that they can maintain power. They extend term limits. They extend copyright. Mickey Mouse, for crying out loud, should go into public domain in 2024. We'll see if that happens. It probably won't. But the point is that anything that represents power and value, they like to aggregate at the top. Even when we live in countries where we're supposed to have a representative republic or a representative democracy, however you want to frame it, when we have elected officials, they seem to have this nasty habit of never retiring. Even when we supposedly can elect them and replace them, they never seem to get replaced. It's weird. And then they seem to keep on getting more and more wealthy. So yeah, I think you're probably right. I think that is probably why we're seeing more of these manipulations. But the SEC versus XRP. CFTC commissioner does not support SEC and visits the Ripple's CEO, Brad Garlinghouse. So pretty interesting. Commissioner Pham expressed her opinion about the SEC back in July of this year when she said that it is unacceptable to regulate by enforcement, citing the Wahi case as an example. Describing the importance of the process because of its possible implications for the entire crypto industry, the commissioner appealed to the principles of openness and transparency, which involve the public and experts in rulemaking. Read my statement on the SEC versus Wahi, regulation by enforcement, and CFTC authority, crypto, digital assets, DAO. Carolyn Pham, thank you. I don't know that you're like the top advocate for cryptocurrency and digital assets, but it's great that you're willing to try to put the SEC on its heels right now. I'd never thought I would be congratulating the CFTC or thanking the CFTC, but here we are. Stranger things, right? The CFTC apparently is becoming a little bit of an advocate, pro-cryptocurrency advocate. And yeah, they're citing the Federalist Papers in their statement here. We got Crypto Crag in the chat saying, yo, appreciate you being here. Thank you for hanging out with us on our live stream. Proof of live comments. There you go, guys. The Deadwood says Pelosi and AMD is our latest example of insider trading. Yeah, Pelosi and AMD, come on, man. That's ridiculous. Absolutely ridiculous. But yeah, I think it's great that the CFTC versus the SEC is even a question that we're having right now. We absolutely need to be asking that question, but at the same time, stay awake. They're doing a this is a two options close, right? If you study sales or if you've ever done sales, it's a two options close. It's like, well, who do you want to have regulate crypto? You want it to be the SEC or the CFTC? And we both know, right? Like, we know this, audience, right? What the entity, the government entity that we really want to regulate crypto is nobody. Like GTFO. We don't. That's the agency that we want. We don't want the CFTC or the SEC bearing down on crypto too aggressively. We can have criminal investigation units and law enforcement, like the FBI, do forensic research on serious problems when there are real victims. But the SEC versus the CFTC, like, that's a false choice. It's a false dichotomy, and it's a two-option close, right? They're trying to close us on the idea of, like, well, you got to choose some organization to govern your hobby here, guys, because otherwise you're never going to get mainstream adoption. Yeah, maybe. I think we still need more time, though. I think we still need additional innovations, and I think that we are seeing real innovations come out of the Web3 movement. So, sorry, Bitcoin maxis, like, Web3 has been important. It's been important for Bitcoin even to have that Web3 movement run through it. There we go. Get a little more. Oh, there we go. Let this thing breathe a little bit. It's kind of bugging me a little bit. So, yeah, that's how I feel when somebody says you got to choose between the CFTC and the SEC. I think, you know what? I don't want you to just step in and tell me that I have to be governed. I want to make more choices there. You tell me what you think in the chat, Mind Your Biz fam, but I'm not feeling it. I don't want either of these institutions to step in and say, yeah, we run crypto now. I think we still need more innovation, and I think that innovation needs to be allowed to breathe and grow with minimal interference from these groups. But least of all, let me just mention, I don't want to name names, but there is a high-profile crypto influencer who has been targeted by, I haven't even really flexed. Deadwood, if you want to see it, we can flex, but I don't want to go there. But apparently I got called out on BitBoy's show the other day for making the ladies faint, making them feel a certain way when I actually flex the guns. But yeah, I don't want for these institutions to say, like, or these government entities to say, like, you know what, we run crypto now, and we're going to make it harder for crypto companies to compete in the United States. All that's going to do is create capital flight, and it's going to create brain drain. Ironically, one of the most free countries in the world is going to start losing some of its best and brightest because you want to make it impossible for crypto companies to be formed here and to innovate here. But worst is crypto influencers being targeted by the SEC, right? You got these crypto influencers being targeted by the SEC and trying to put in language such as, well, because the majority of validators are in the United States, that means that this transaction falls under our jurisdiction. This is in the filing of the SEC versus Ian Bellina, and it's complete horse crap. The SEC means to try to put verbiage into that case that would create legal precedent for them to be able to say that anything that happens on Ethereum is now their jurisdiction. Guys, the merge is barely 2 weeks old. It's not even a week old. The merge is not even a week old, and the SEC is trying to do this case and claim that because there are so many validators here in the United States, that everything that happens will now be their business. We cannot let this happen. So while the facts and circumstances of that case of the SEC versus Ian Bellina, I don't know all of them, the fact that even exists in their filing means that it is toxic. It's an omnibus. It's sort of an omnibus approach, right? They're going to shove everything they can into cases like that, and cases versus versus XRP, and cases versus LBRY, and we cannot let this stuff happen. I sincerely hope that because of that verbiage, here's the good news. Because of that verbiage and them saying, well, everything that happens on Ethereum is our business. Well, guess what else will become your business when you claim that everything that happens on a decentralized system is now your business? You may have given us, SEC, you may have given us the ammunition that we need to go class action and sue your asses after these guys win against you in court. So do I know all the facts and circumstances for Ian Bellina's case? No. Do I wish him all the best of luck in successfully overcoming this? You better believe it. Yeah, I want to see him successfully overcome it so that we can all countersue and go class action against the SEC, if possible. Right? We'll see where this goes. But the fact that they are pretending that everything that happens on Ethereum is now their business, they get to be the world police of Ethereum? No, I don't think so. But hey, they said it, so that makes us all involved. And that potentially does open the floodgates for us to go class action, countersue, and show the SEC like, no, you idiots work for us. You don't tell us that like everything that happens in crypto is your job right now. You work for us to try to actually protect us. And you need a reminder of that clearly. So let us go and collectively, all crypto users, we'll just kind of line up and we'll give you a little paddling, okay? Till you guys remember. I'm not happy at all about what the SEC is doing there, but the fact that they went there may mean, and I'm not a legal expert, but it may mean potentially that we can go class action against them because of the way they're framing that language in the case versus Ian Bellina. I hope that it is that way. We'll have to get Coin Center, some kind of guidance from Coin Center or some other kind of advocacy group to see if those implications are really there or if I'm just reading into it. But it would be amazing if we could do it, and I think it potentially is something that we have to do. Crypto Crack says, this makes me want to exit all of my ETH. I hear you there too. No, I do get it, but the amount of total value locked on Ethereum, hey, you like stable coins? The initial smart contracts are issued on Ethereum, then they're bridged over to all the other smart contract networks. Do you like seeing yield platforms? They mostly favor Ethereum. Do you like NFTs? Even stuff that has ultra high utility, they favor Ethereum first. So like, I hear what you're saying, but Cardano isn't ready. It's nowhere close to ready. The Vassal hard fork is like, it's something. Good job staking nodes for updating to software version, what is it, 135.3? Cool. You did a software update and you're gonna get an upgrade soon. But I don't know. I don't know that it's true that Cardano can actually compete with Ethereum. I don't think it's true that Polkadot can. I don't think it's true that Solana can. It's maybe true that Cosmos can. Maybe. They might have enough tech in place, and with this Cosmos 2.0 upgrade coming up very, very soon, it might be in an even better position to compete with Ethereum. Not be an Ethereum killer, but properly support it in a decentralized ecosystem, right? Where there's another option, is all I'm saying. Even then, there's no such thing as an Ethereum killer. And we found that out this last cycle. Nothing is killing Ethereum except for maybe regulation. So we got to keep a weather eye out for that. All right. What are we at? txstreet.com. Let's take a quick look at the current median transfer fees, current median contract fees, and the current median gas price on Ethereum. Take a look also on Bitcoin, not for the pending transactions, but the median fees in both dollars and in Satoshis per VByte. And it looks like contract fees on Ethereum are under $4. They're under $3.50. Current 20 GWE gas price. Phenomenal pricing right now on Ethereum. So if you need to right-size your portfolio or make changes, you can. Transfer fee of 57 cents. It's almost the same as Bitcoin right now. It's awesome. Love to see it. The Deadwood says ETH having over 500,000 transactions stuck in the mempool is an issue. I think this will lead to higher gas fees. Well, that's just it. By definition, having all those transactions stuck in the mempool, they're stuck in the mempool precisely because they are the fees that were offered to the network were too low. So they'll eventually be gotten to, or they'll be forgotten, right? Like that's just it. They'll essentially be considered a cost of doing business. They'll just disappear. But they should be gotten to if the gas fees do decrease over time. The fact that it's only 20 GWE right now is probably a good thing, but yeah, it's not helping the backlog too much. We do see, however, and you kind of get a visual representation of it, we do see that there are low fee transactions that are making it through, right? Like sometimes they get stuck in the low fee line, but then other times we're actually seeing low fee transactions make it through. All right. What do we got here? Nope, these are also just like, yeah, no, these are transactions that are making it in. Man, I love this. I really do love the visual representation here. But 20 GWE is helping a lot. The low fee line over on Ethereum or on Bitcoin as well. Like it's not like you don't get stuff stuck in the mempool. It happens on both networks. And while we're looking at this, guys, thank you for smashing that thumbs up. Thank you for sharing this video while we're live. Since we've started at the new home for Mind Your Biz, it's been a bit of a struggle to help YouTube view with their algorithm that this is content that everybody needs to see. Talking about the Cardano Vassal hard fork is something that I did primarily to get attention from the algorithm. And I'm just going to say it outright. Like, I don't think that Cardano is like whatever, the bee's knees plus Swiss cheese. Like, whatever. Like it's just another day in crypto. We have upgrades coming. How does that actually help improve usability? How does it actually help improve throughput? How does it actually make DeFi more accessible to people using that ecosystem? All that stuff is going to be answered after the fact. So these are just more rumors that people are buying so they can sell the news when it actually happens, just like Ethereum's upgrade. I think we are going to see like a pop in ADA's price, but then we're going to see a drop that comes after it, right? After the update is done, and people are like, all right, cool, we tricked all the plebs into buying it because the Vassal hard fork sounds like a cool brand. All right. Same old in crypto. We've been doing that for years. Right? Buying the rumor and selling the news. So I'm not too worried about whether or not Cardano is going to become the Ethereum killer. Newsflash, it won't. And this is in part why, right? Like Ethereum is becoming more usable with lower fees right now, but it's in part because of lower usage. So there you go. It's it's a mixed bag. DeFi Llama is showing us that the top 5 is still kind of up for grabs. Between Polygon and Avalanche, that the top 5 are things that they can kind of contend for, but BSC has been dethroned by Tron in the number 2 spot. I'm a little bit surprised by that, but I suspect that what's happening here is that the USDD as a protocol, or whatever it is that's contributing to USDD's core value, is helping there. But Just Lend, Sun, Just Stables, USDJ, Social Swap, we're seeing a couple billion there between Sun protocol and then Just Lend protocol. I think we're seeing some manipulation here where there's not really a whole lot going on Tron. Not many people are actually using Tron, but the core value, the core utility of Tron is that it's then being reused, right? Loaned against itself, liquid staked, put into liquidity positions, like liquidity pairs, and then being collateralized into loans against itself. And so it's kind of being shown off as the total value, but it's just being the derivatives. I think that's what we're seeing, is we're seeing derivatives in TVL, and they finally figured out over on Tron how to make more of their derivatives look like the TVL. So I don't take this too seriously. I'm not going to become some kind of a Tron maximalist, but we do have to pay attention to the fact that on paper, at least, it looks like Tron is coming up in the top 5. BSC has been dropped down to the number 3 spot. Avalanche and Polygon are rounding out the top 5, and Solana is out of the top 5, which for my taste is where it should have been for a long time. So just that's the current state of things there. We can include when we do look at liquid staking, when we do look at double counting borrows and pooling and then staking, we can see some additional changes here. While I wait for that stuff to update, the Deadwood says the day after the fork, we saw a 200,000 mempool logs. Now we have hit 540,000. I didn't realize that the mempool backlog went up by that much after the beacon chain merge. I didn't know that. He says, I worry this is during a slow time. What will happen when the market starts pumping? Will the number of validators increase to loads? And then says, or will we see people just break and pay more to save or make money? Yeah, that's a tough one, right? I mean, definitely during DeFi Summer 1 and then DeFi Summer 2.0, the fees on Ethereum went up significantly because of the amount of profit that was on the table and the use of flash loans too, to be able to pay off like leverage, we'll say, in real time. So I don't know. I don't know. I think we're going to see more of the same, though. History doesn't rhyme, but it does. Sorry, history doesn't repeat, but it does rhyme. So I think we are going to see something like that again, where we're going to see that fees go up and that people are willing to pay them, or institutions are willing to pay them. But it's the retail users like you and me, where we're like, yeah, no, I don't want to spend, I don't want to spend $50 if I'm trying to send somebody who I know like $5. Right? Like, it's insane, right? For something that's meant to be decentralized monetary systems, decentralized finance, I'm not going to spend that much in gas fees to be able to send like, microtransaction or a remittance. So Ethereum might get cut out of the microtransaction and remittance, or micropayments and remittance category for a time, if that does happen again. But I suspect that's the direction it's going to go, is that, yeah, gas fees will go up. And I've said it already. I don't think Ethereum's going to go deflationary. Not anytime soon. I think that that each block, that the validators right now, that because they're receiving the block rewards that proof of work miners used to, that we're going to see MEV and flash loans and flash bots step in to increase the validator reward. And the people who are running those validators, they're just going to keep on trying to like milk the system for all it's worth. So yeah, I don't see fees going down. Not anytime soon. I think when we have good fee days like we've been seeing recently, that's why I continue to encourage people without giving you advice or whatever. I'm not your financial planner, but that's why I continue to encourage people. If you see low fees, take advantage of them. Use them for whatever purpose you need to, and including like getting your coins onto like non-KYC exchanges where where legal, while still legal, and get your funds kind of. Get your portfolio put in the right place for you, right? Like, don't waste that time, because you'll blow hundreds of dollars or thousands of dollars in gas fees if you wait until the pump. It's going to be a problem. But now we've got everything kind of selected here for the TVL numbers, everything from staking to liquid staking. It's a slightly different figure, right? Everything all in, totally considered with liquid staking. Ethereum is, of course, still on top. BSC is back in the number 2 spot. Avalanche and Solana pop up as well, though. That does tell me that Solana has a lot of liquid staked and a lot of rehypothecated assets on its chain. And it's telling me that Polygon has very little by way of liquid staked or rehypothecated or derivative synthetic assets on its chain. So there you have it. Lots of throughput and lots of brands participating on Polygon, fewer on Solana, but then a lot of stuff that's just like doubled down by way of synthetic derivatives on Ethereum and BSC. Tron, maybe not so much. So maybe there is a redeeming quality there. Maybe I was wrong. Maybe less of it was set up in the way that I thought it was. But that's our DeFi Llama check-in really briefly. Over on GPU Mineable Portfolio, this is where the rubber meets the road. Ladies and gentlemen, this is where I get really excited to talk about, content on Mind Your Biz, is when we see that GPU mineable coins from years past, and I've still included, I think, Safecoin, which is no longer GPU mineable, but was GPU mineable 2 years ago, right? Or 2.5 years ago. Like, we get to see how all of that has been paying off, or if it's been paying off, or if it's not paying off anymore, or if it doesn't make any sense anymore. And, you had Bitsby Trippin on his stream yesterday having a very sober talk about the markets. Well, this is my sober talk about the markets. So we got Flux in the number 1 spot, still in the money, still profitable. So I don't care who you are. If you're saying Ravencoin was going to be profitable after Ethereum, please stop talking. Flux has actually maintained profit over years. It came up higher after the point that like Ravencoin started to hemorrhage value after it hit its all-time high of 1,600 Satoshis. And I really don't see Ravencoin going back to that per coin valuation of 1,600 Satoshis. Not ever. I don't see that happening for Ravencoin. I do see Flux, because of its utility, going up beyond Ravencoin at some point in the future. It's been my top pick, and it's been my top pick based on data, not just my gut feeling. Of course, my take on whether or not it has utility is probably, informing my gut feeling and informing, how I'm choosing to look at the data, but certainly utility doesn't hurt. I do think that Flux can be a $10 per coin the asset. And I think that being a $10 per coin asset only barely gets it into the $1 billion range, right? The $2.5 billion range, which puts it on par with a lot of large cap coins, right? Or small cap to large cap coins. I think it's very reasonable to view Flux as potentially having a $1 or $2 or $5 billion market cap, right? The way that Dogecoin does right now, or Litecoin does right now. It offers quite a bit of utility. What it doesn't have is privacy. And that, to me, is disturbing. It's upsetting. But, oh well. They made that choice because they thought it would be an issue for their compliance. I don't think so, but oh well. They made that choice for that reason. The rest of the portfolio, some of it's filled, some of it is not. Kaspa, Neoxa, and Gemlink do not have holdings here. We probably would need to do that to see how well they've done. But over the last week, Kaspa's done quite well. It's popped right up. 7 days, it is the highest performer. Beam has come up as well, but so has Safecoin. Just want to mention that. Safecoin is that little coin that could. They've got an exchange that they run called safe.trade or at safe.trade. and it's been pretty decent. They rebased their code to Solana, and because they are mostly using it as the counter pair for most of the coins on their exchange, it puts the total liquidity for their exchange pretty low, right? So they've got a few $1 million on their exchange, and some of that is including the safe, the safe pair. So I don't know how long that's going to last. I don't know how much longer their exchange will be there. Since the leadership is based in Canada, they have told me in live streams and in conversations or interviews before that they are committed to changing the territory where their exchange is formed in order to prevent abusive KYC laws, right? And maintain just a common sense KYC approach where within certain amounts, you don't have to KYC on their platform. So I appreciate that that's the stance that they were committed to a couple of years ago. We may interview them again, but just wanted to say they're still on the list for a reason. They were once GPU mineable, not anymore, but they were once GPU mineable, and they are friendly to miners now by way of giving you a KYC light off-ramp for your crypto holdings. That's why they're there. Hard drive mineable coins. Let's see what we got here. Made safe. Made safe top of the list. Everything else just dumping. Chia finally broke below $35. We'll see if it'll continue to march towards that $15 price. It would be cool if it did. Shout out to the poor investor because he knows that I would be obligated to get some if it does get to that point. Raptorium top of the list. Heck yeah. Raptorium top of the list for CPU mineable portfolio. Epic Cash dropping into number 2. Both of them, small caps, right? Micro caps, essentially. Monero, the only small cap coin, rather micro nano caps. I forget how it goes there for the definitions. Monero is the only small to mid cap that we know with billions of dollars in the market cap that is on the list, and it's 44% down still, but still maintaining a price well over $100 and still CPU mineable. Monero has come up. I think it's maintained its price action above Doge. We'll see. But 5.3 cents is the price for Doge to beat. Let's take a look in the ASIC mineable portfolio to see if it has beat that price. Dogecoin currently at 5.9 cents. So it is back in Doge's favor, and the market cap, of course, at almost $8 billion means Dogecoin is a more highly valued project than Litecoin, and by far much more highly valued than Zcash. Zcash dipping all the way to below $1 billion at about $500 million. And it's not that I think Zcash is without merit. Of course it is, but they're talking about moving to proof of stake, and I just have made no secret of the fact that I don't think that they should do that. I thought that they shouldn't kick GPU miners off of their network either, and they shouldn't have fallen to ASIC mineability. And I think that's in part the reason that they've got the problem that they do now is because they alienated miners. If they hadn't alienated GPU miners, who knows? Maybe they would still have that much higher valuation. But we can't know. We can't know for sure. Nervos Network hitting my radar in a big way. We may have some news on the CKB and Nervos ecosystem very, very soon. We'll see. But it's up this last week, and very likely because of some announcements that hit my radar. Talk about that another time. But it's one of the few coins that actually is up over the week that's ASIC mineable. Grin also, it still exists. I don't know what to say about it. The chart looks manipulated AF, just not good looking at all. Devault below $100,000 total market cap. You hate to see it. Pirate Chain at below 100 million market cap. On sale though, if you're interested in their ecosystem. Bytecoin pretty much flatlining, pretty much going away, and hopefully we do see it go away for good, because it's not usable in commerce for the most part, and while it does have privacy technology built into it, it just hasn't been the best actor in the privacy coin space. FPGA mineable coins, Cadena. This is not entirely true. We do have to start putting Cadena onto the ASIC mineable category because of the most recent miner that's been released. So let me jump back and add it if it's not already added. I don't think it is just yet. So yeah. KDA. Like the way I said that like an 80s rapper. KDA. All right, KDA is on the list now. We need to add some entries here and yeah, get back to properly pruning this little portfolio. But Cadena is the top of the list on the FPGA mineable coins. And in terms of long-term HODL strategy, in terms of the last 7 days, it's been a slightly different story. Teller has done the least worst over the last 7 days. Everything is kind of taking a beating still. Handshake. We got a little story about Handshake. I did buy a Handshake domain name over on Namecheap recently, and I found that adjusting its DNS is actually really difficult, and resolving DNS for Handshake names is actually really difficult. So I'm going to have to figure out how to get that done. I don't know how to buy a Handshake domain name and make it actually point to like a website or a blog or something. It's a lot more tricky than you might think, but maybe I can get that done. Maybe we can do a tutorial, and maybe it's a little bit, unstoppable, like how other domain names claim to be. But yeah, that's our FPGA mineable portfolio. Proof of stake smart contracts. We've already gone over this for the better part of the hour, but Cosmos Hub is the top of the list. For the long-term hodl, it's gotten the least damage done to it, only at 3% or almost 4% down from our acquisition price. Solana actually not doing that bad either. Avalanche, Tron, BNB, etc. not doing their worst, right? But Polygon, Matic, or Ethereum is 50% down. Everything else is below 50% down since we acquired it. Or if there's not an entry, I think they all actually do have an entry, so they show our P&L as well. But they're all down, right? So anything that's above Ethereum is Wax, Phantom, Binance, for ostensibly for Binance Smart Chain, Tron, Avalanche, Solana, and Cosmos Hub. Been talking about Cosmos Hub and the IBC ecosystem for quite a while, and I told you, I'll keep the receipt on it, told you not to sleep on IBC. It's coming up in a big way, and I think we're going to see more of the IBC ecosystem here on Mind Your Biz as we cover portfolios. Got the IBC gang portfolio to look at as well. Just a minute here. Junk drawer, Saitama Inu still killing it by way of P&L. Liquidity and market depth for that. If you had any and you were able to take some profits, good luck to you getting some of that out if you need to. But we got plenty of meme coins that are still in the money. But Everrise and Saitama Inu are the top of those two. Floki Inu is still doing okay. Everything below the line of profitability is continuing to dip, right? It's been a bloody week for sure. Hex is down 22% over the last 7 days. So if you are into the Hex ecosystem, then that may be something to consider. And I've got a little surprise for you in just a minute here. It shouldn't be too big a surprise, but and I need to add one more coin to it. But IBC gang, what do we got over the IBC gang? Cadena doing great. Cosmos Hub doing not terrible. Last 7 days though. Looks like our top gainers. Oh my gosh. Our top gainers are Terra Luna Classic. Right, of course. Why? Because why not? $2 billion market cap. How is this reality? Oh my gosh. Comdex at $10 million market cap, and do check for the Comdex tutorials. You will hear a familiar voice on those. Akash Network coming up with a government sort of news of a government contract using their network. Cosmos Hub also coming up with that strong $4 billion market cap and the announcement of Cosmos 2.0, Osmosis, the DEX for IBC, and then Persistence kind of recovering a little bit over last week. That is to say, not doing as bad as other coins in the IBC ecosystem. 10-set gems. You may feel strongly about the 10-set Launchpad. I know I have in months past. Felt pretty good about the 10-set Launchpad. I hope that things do plan out for the 10-set Launchpad ecosystem projects. 10-set itself, I do not hold. And, I'm not going to apologize or walk it back. I don't hold 10-set at all. But I do hold some Everdome, and I do hold some MetaHero, and I do hold some Fame. I think these are important projects. I think what they propose to do is very important. And Conga Exchange, as one of the few no KYC or KYC light exchanges, these are very important projects. And so I do want to be supportive of projects that are building in the direction that I like. That matters. That matters more than people's personal opinions or personality differences. We need builders who are building the things that we need. So yeah, I hope the 10-set ecosystem continues to grow. Stablecoins, what do we got? What's an outlier here? Terra Classic USD. So USTC is dipping, and it's finally so. We need to just let some of these projects die. It's crazy. There's still over $300 million in that project when you have over collateralized algorithmic stablecoins like Liquidity USD or LUSD. Really so low, under $200 million of Liquidity USD. This is an example of a permissionless, over-collateralized algo stable that works. We should be supporting these kinds of stables with our crypto. Same with Frax, right, where it is an algorithmic stablecoin. Over $1 billion held in Frax. Now, does it have administrative keys? I'm not sure. I need to do a deeper dive into Frax. Same with DAI, right? The treasury at DAI being moved out of USDC into some Ethereum leads me to believe it could only be fractionally reserved right now, but it is holding its peg at $1. So I hope that turns out well, but we'll see, guys. This is our stablecoin watch. We got to pay attention to where we're putting our taking profits out to if we're holding it natively in crypto. We don't normally, normally you shouldn't be leaving any of your profits in crypto or these stablecoins if you can avoid it. Paul D is in the chat saying, I'm here. Did the SEC moon Chia? It totally did, and you missed it. I'm sorry. You got to be here live to get this news. And because you weren't here live, it did moon for everybody else. Just, how do I say this? Not for you. Sorry, brother. It's just tough cookies. Next time, be here on time. So, guys, our stablecoin watch. Yeah, SUSD, but Synthetics USD also doing okay. Peg staying pretty good, guys, on most of these projects. But anything that's reliant on USDC, I'm suspect of now. And anything, all the FUD that's coming out, again, the renewed FUD against Tether and the renewed FUD against Binance USD makes me think that these are probably safer assets than we've been led to believe. So USDC has become my least favorite stablecoin over recent months because of all the nonsense from regulatory bodies and law enforcement. DAI was already kind of my go-to, but with USDC becoming so evil and DAI having to pivot, I'm starting to look at Frax and LUSD in particular. Magic Internet Money, because of its reliance on other algo stables, made me a little bit worried, but liquidities over collateralized, the collateralized debt positions that are required to mint new liquidity, and same with Frax, gives me a little bit more confidence. But we do have more pain ahead, I think, in the crypto markets. We do have more blood that's going to metaphorical blood in the streets that we're going to see soon. So I do worry a little bit about the collateralization ratios on these stablecoins, but I still feel better about those than having stablecoins that have a central issuer like Tether or like USDC, where they'll see that like, oh, well, OFAC says, the Treasury says, well, look, an executive order says. Cool story, bro. Crypto is for everyone, not just United States citizens. So if you want to make a stablecoin, make it stable. And if you say you're participating in decentralized finance, then make it decentralized and permissionless, right? I think we should be more concerned with permissionless finance than decentralized finance now with the direction things are going. So that's my little soapbox rant there on stables, guys. GPU Ethereum replacements, guys, not a whole lot more to report here. We already looked at the other long-term hodl there. We might add some numbers here. I don't know if it's worth it, though. I think primarily our GPU mineable portfolio tells us what we need to know there. And, drum roll, I'm adding it, guys. I think it's time. Time for us to add an RH ecosystem category. Is it because I'm some kind of RH maxi? No, but it is because it's an ecosystem that will become a proper ecosystem very soon. I'm going to do the same for Dogechain as well. Does that mean I'm some kind of Dogechain maxi? No. It just means that these are smart chains. These are EVM compatible chains that are going to have TVL. They're going to have value locked on them, and we need to pay attention to them. So when you got billions of dollars locked on some of these ecosystems, we need to pay attention to them and be smart about how we manage our portfolios. Some of these may perform well, and it's undeniable that they can perform well based on their history, so we need to pay attention to those chains. Pulse Chain will be one, Dogechain will be another. I'm calling this the RH ecosystem because most of these projects they currently exist, unlike Pulse Chain, which, spoiler alert, hasn't launched yet. It doesn't exist yet. It has a test net, but it doesn't have a main net. These already exist. These are already traded. They're on other chains, right? Primarily Ethereum and then some Binance Smart Chain as well. I think there may be one or two that are also traded on Polygon. But yeah, we need to pay attention to them. One additional coin is it's Cult DAO. Right, so there you go. Cult DAO, which I forgot to add to this little portfolio. It's doing probably best, right? Clearly, the others don't have a measurable market cap, or CoinGecko is just failing to measure their market cap. Does that mean that we're going to need to move away from CoinGecko? Maybe for that side of the portfolio. I might need to roll my own custom spreadsheet tracker that is able to pull some data from other sources. And who knows, this might be the time for us to fully move away from centralized sources like CoinGecko and some others. Like, I don't want to get too radical here, but I just mean to tell you, like, expect a little bit of a pivot and an upgrade to the content that Mind Your Biz covers. Because yes, we need proof of work content, and without abandoning proof of work, we need to also pay attention to projects that will help us preserve value. Right? We cannot let ourselves get wrecked. What's happening in the global markets right now is kind of scary. It just is. I mean, I'm just going to tell you straight. It's kind of scary stuff. So being able to preserve the value while we see, runaway inflation for CPI, not just the 9 point whatever percent that the White House is admitting to, but the real on the world, on the boots on the ground numbers of real inflation, real world inflation at the register. We need to have our crypto work harder for us. Full stop. So we need to be committed to using the tools that help our crypto work harder for us. So Paul D says, wasn't Hydra supposed to get to 150,000 TPS on Cardano 2 years ago? Yeah. Yep. And that's why I'm not too worried about the current news, but I will be tagging the crap out of this live stream so that people can check it out. And I will be doing some deeper dive content into Cardano because that's the news cycle right now, guys. Please don't hate Uncle Seth for playing the game. I got to play the game. If I'm here on YouTube, then I have to do what it takes to get the clicks and the attention on YouTube. We will be establishing this channel a little more deeply, but just know, we will not be giving up on proof of work. The fact that Ethereum did is not our problem. We won't be giving up on proof of work. I don't think you should give up on proof of work. I think it's a difficult time for GPU miners, but we should not turn our back or give up on proof of work. It is decentralized. It is like Dennis Porter gave a great interview to the Altcoin Daily Twins talking about how it is one of the only ways for the crypto ecosystem to potentially go carbon negative, as counted by politicians and real world balancing the grid and balancing demand for power. It is a very important thing. It's a very important development in the world. Bitcoin leads the charge with proof of work, and Ethereum was a close second by way of commodity hardware in GPUs. Monero is also pretty good, and RandomX is also pretty good, right, for CPUs. But GPUs it's kind of the sweet spot, right, where it is a dedicated investment into more high-performance hardware that can scale, that consumers have access to. You can buy just one at retail. You can go to a Best Buy or to a Micro Center, and you can pick up just one GPU for a couple $100 or a few $100. And about the same price as a CPU, right? For a gaming rig or for a desktop. Or you can buy a laptop that has a really good GPU in it, and you can contribute that way. So, we're not getting rid of proof of work, at least not in my mind. Should we get rid of proof of work? So, yeah. Stay tuned. I'm not saying that we should turn our backs, but I do think that we should pay attention to projects that can help us preserve our value. When we mine into these into profit, we can maintain that profit by using DeFi tools to get profitable coins. Throwing it out there. Crypto Crag says the 4090 was announced at 4 times the performance of the 3090, and FE edition will be $1,600 on October 12th. That's awesome. Definitely appreciate the update there. We will cover maybe a little bit of that here on Mind Your Biz. We're not primarily a tech channel in that way, so I don't know that I'm going to be doing benchmarks on GPUs. That's not something that I've always done. We have done mining challenges. We have done overclock challenges. We did a 24-hour or an overnight live stream when the 2000 series, when the RTX series cards launched, and we all overclocked, took turns overclocking. So, but we're not going to necessarily be doing that into the future. I will be going over node infrastructure. We'll be going over how to right size your mine if you have just a few, and we'll see. Paul D said, did they get rid of SLI support because 2 can't fit on an ATX motherboard? Yeah, that's probably why they did it, for sure. But you figure if PCI Express were architected correctly, would we really need SLI? No, we wouldn't really need SLI if PCI Express were architected correctly. So just saying, SLI has always been kind of a workaround there. But yeah, guys, that is our show. Expect another. Well, I'm going to add it right now. Actually, create a portfolio right now. We're going to call it the Doge Chain ecosystem. I'm doing it. I'm going full crazy. We'll call it. And we should be able to start with our very first entry. Just Doge Chain. Oof. It hit caps lock, but it's going to be fine. What the? There we go. Alrighty. Add it. Jeez Louise. Yeah. So we'll be monitoring that as well in the coming weeks and months. Guys, let me do a quick Q&A before I close things off here. I do not have to rush to any meetings that I'm aware of right now, which is kind of nice to have a little more relaxed live stream. I powered through all the rest of our content earlier on, but let's check any other Q&A that we have. The Deadwood says, HUU, Anchor, and Matic formed a partnership announced on Twitter today. I did not realize that HUU, Anchor, and Matic formed that. Deep Doge, says Paul D. What most people don't realize is that Doge Chain itself uses the Polygon SDK. That's how it was created. So let me there we go, correct some of my backdrop there. Come on, green screen, do your job. Paul D says Doge Chain on Cosmos. Well, it is not it's not an IBC app specific chain. And it's interesting. I was able to listen in on some of the calls of the development team as they were getting ready for launch. And no, I'm not part of the Doge Chain development team, but I did overhear conversations with them saying that they were considering using the IBC, the Cosmos and Tendermint stack. But no, they went with the Polygon SDK. And what most people don't know is that the Polygon SDK does have Tendermint consensus protocol. So Polygon does use some of the best of Cosmos, their code base, but not the other way around, right? So it just allows for it to be an EVM system. So yeah, there's a reason that the Polygon plasma chain and the Polygon proof of stake chain, but they've done so well, right? Like there's a lot about the architecture of Polygon that is provably better than some other EVM entrants, right? But yeah, I'm not going to try to convince you. Like, I'm a bit of a fan for a reason. So, yeah. But unless we have some other questions coming in, somebody said something about like, oh, Seth trying to flex on it. Let me go double biceps. Oh, I'm not very lean these days, but also not very very big. Whatever. It's probably a young man's game anyway. I think if I push too hard here, I'll definitely feel all the old joint pain. Not as old as I make it sound, but I'm not as young as I look either. So it's funny stuff. No more questions, guys. I don't see any more questions. The Deadwood says the only Doge I bought was after 2017 for $5. LOL. Not bad, right? It's rainy day crypto. In the same way that I think everybody should have a bit of Bitcoin. Like, why not have a bit of Doge? Wouldn't hurt. It's a permissionless network. It's as provably decentralized as Bitcoin is. So why not? Deadwood says, yoked. Good for you. Hey, I appreciate you saying that, man. I appreciate you saying that. I always feel like I'm a little bit behind the 8 ball, right? Like I'm a little behind on physique goals, right? So, but I don't know. I've been told that I don't know. I act like I have PTSD. There's really no reason for it, guys. No stolen valor here. I didn't serve, but I always act like I did. Like I saw some weird stuff. Maybe I just had a very rough childhood on some level. Maybe. I won't make it too personal here, guys. Thanks for watching all the way to the end. I'm going to call it a live stream. That was a lot of fun. Thanks for playing the game with me. And remember, when it comes to things like influencers getting picked on, or the XRP's case, or library's case, it really is the SEC versus all of us. The Vassal hard fork is getting forked. Expect a little more micro content on that. And I think we might start doing some additional live stream content, and definitely have some additional creator highlight content coming up very, very soon. Your support is much appreciated. Really do appreciate you guys smashing like, hitting subscribe, sharing the link, and of course, being supportive as you can. You are the reason that I make this media. I love your face. Remember to stay private and mind your biz.